I try to make this a little bit faster because this lesson is pretty self-explanatory, and maybe it'll load on YouTube a lot faster. So yesterday we learned what to do, how to calculate and record adjustments for supplies and prepaid insurance, right? So today's lesson is on adjusting merchandise inventory and interest receivable. So we know we have learned how to record revenue when a sale is made for cash on account. So now we're going to learn how to record it for accrued revenue, recording transactions like when income is earned in one fiscal period, but it's received in a later one. And we know that whatever we have at the beginning of the year, fiscal period, would be our beginning inventory. That pretty much explains itself, right? And then whatever we have at the end of the fiscal period would be our ending inventory. Businesses usually use like a periodic inventory system to record merchandise going in and coming out, so they can keep a good record of what merchandise they have and what needs to be brought up to date. So today we just learned how to calculate that and how to journalize that. And we know yesterday there was in 15.1 we talked about there was 4 steps that you needed to do to journalize the prepaid insurance and the supplies. So today there's 4 steps that you need to do to record your merchandise and interest receivable. The steps are very similar. So to figure out, you have to first figure out for your income, you figure out what your merchandise inventory is at the beginning of the year, right? And then you just calculate it, or you subtract it from what your inventory is now at the end of your fiscal period. So the 4 questions is you need to know what is the balance of the account being adjusted. In the example, it tells us merchandise inventory is $108,000. Set what should be the balance, and it tells us 102. So you subtract those two, and the difference, so the decrease was $5,648.44, right? And we know that merchandise inventory is an asset account. So if it's an asset account, our asset account normal balance for always, forever and always, is a debit. And the merchandising inventory, this merchandise inventory relates to, that always means your inventory at the beginning of the year. That's your balance at the very beginning of the year, is your merchandise inventory and your trial balance. Okay, and so we know that's what's the beginning, and then we know what our balance should be. That's what's left. So then we subtract the 2. All purchases during the year have to be recorded in the purchase account, and then sales get recorded in the sell account. So then we have to take that and we have to update our merchandise and inventory so that it is up to date. Physical inventory is always conducted at the end of the year. And you know, if you guys have worked anywhere, like a restaurant or whatnot, maybe you take inventory on hamburger buns. Maybe you take inventory on how many straw lids you have. And a lot of times, a lot of companies do that too, to keep track if there's any theft going on, and whatnot. But it's very important. If you're a good business person and you're managing a business, you're going to keep good track of your inventory. A lot of people do it every month too, whatever your period is. So whatever the difference is in the beginning and ending amounts, that is your adjustment. That is what has to be recorded, okay? That is what is on hand. Your beginning and your ending, that is what is on hand. And that is what we're learning to adjust today. And then we're also learning about how to do accrued revenue. So revenue in one fiscal period that you make, but it's not received until the next, that is called accrued revenue. And then the income, some of the rent has not been received. Yes. Okay. So, again, you'll just start with asking yourself the 4 questions. And we know that to do our interest, because we learned about this in 13, you take your principal times your interest rate times the number of days, right? And then it's always by 360. So like this accrued interest rate for the interest receivable on this note, because now we did our adjusting for inventory, and now we are going to come to our accounting for accrued revenue expense, our interest expense, or interest receivable. So this says November 31st. So November 31st to December 31st, we get 60 days. That's where they get that. Okay. And again, guys, read through this. It's pretty it'll help you. So on your work together, it tells us from a physical count of merchandise and inventory, the December 31st balance is determined to be 96,471. So that's our balance. This is our ending balance. It's giving us our ending balance of inventory. So we come on 425 and our merchandise inventory, right? 94,000. This is our beginning because it's always the beginning. So you just take 96,000, what they give you, minus the 94,000. That difference is 1625.94. So in our general journal, we are just going to record that. On the 31st, merchandise inventory, it's a debit, right? So then our income summary has to be a credit. Okay, and then the next thing we're gonna do is our interest receivable and our interest income. And it tells us December 31st, it's a 90-day 8%. So that's 8,000 times 0.08 divided by 39 over 60. So that's 69.33. So our interest receivable, again, we just record that right under our merchandise on the 31st. Interest receivable is a debit. Interest income is a credit. And guys, I got the 8,000 because that's the interest on that notes receivable. And again, that is right here too. And it gives you that. So I took the 8,000 from that. So if you're doing the work together, your merchandise inventory at the beginning of the year is 165,000, right? It tells you at the end was 158. So you just subtract those two, and then you record it in your, which was 7 in your general journal. And the same for your notes receivable. So your notes receivable that they took out for 120 days and they agreed to pay 9%. It was 7,500. So you take 7,500 times 0.09 times 120 divided by 360, right? And that'll give you what you paid in interest, and it should be 138.75. So that is on your own. So that's the 2 information you need. Let me know if you have any questions, if you don't understand anything.